Garth, let's bring you in here in the fixed income space and deal with that at the top of the segment of the show. What are your thoughts around fixed income in South Africa at the moment?
I think the theme continues like we've seen in the last few months. I think that the world is still in a perplexed position with regard to deflation, growth. US Treasuries continue to rally. We saw the alluding to increased quantitative easing by the Fed. That supports bond markets. I think as the US Treasury bonds rally and we see a reallocation of capital from the developed world into emerging markets, our bond market will be supported. I think that we can still see yields lower. There doesn't seem to be a threat of inflation anywhere in the world, certainly not in South Africa at the moment. So I'm constructive on bonds.
Kevin, you are nodding away. Are you constructive on bonds as well?
Constructive, if that means, I think they'll remain strong, yes. I think the trend will continue. One of the big factors that supports, which Garth mentioned, is the fact that the Fed has clearly indicated that they'll continue to buy government bonds. Remember what the Fed's doing. It's not just about announcing more quantitative easing. What the Fed is doing is they own a whole lot of mortgage-backed securities at the moment. As those mortgage-backed securities mature, they're taking that money in effect and putting them constantly into US government bonds. So there's this constant buying by the Fed of government bonds, which then keeps those yields relatively low and sets the tone in effect for the global bond market. So while we're in this environment, you would have to bet that a couple of things happen. The dollar remains under pressure, bonds remain well bid. Global bonds, in terms of emerging market bonds, remain well bid. Something needs to change that would upset that. And there are a couple of things that could well change in the future. The most obvious would be if inflation picks up and there's suddenly a global concern that inflation is going to rise and become a problem. That would change things dramatically. If the Fed stepped away from this buying program, that would change things. There's a lot at risk for the bond market. So while we sound quite complacent that bond yields will remain low and the market remains well bid, there's a lot at risk. It's just that as you look over the next couple of weeks, couple of months, you can't see that those risks are about to materialize. So the trade remains in place.
Jacques du Preez, RMB, just having said that they're expecting the US dollar to come under further pressure in the short term, specifically because they don't have the Chinese propping them up by buying US treasuries at this stage if they're allowing their yuan to strengthen, some sort of strengthening policy there. We're not quite sure how that's going to take place. But just quickly your thoughts, Garth, on the US dollar and whether you concur with that weaker US dollar for longer?
I think so. I think if you look back in history, the dollar has been propped up by many factors. It's the global safe haven, it's been the reserve currency. There's many reasons why people have accumulated and held dollars and why it has been artificially strong. There's certainly global imbalances that need to be unwound. Given the problems in the US and I believe even US policy to weaken the dollar and favored by fundamentals to have a weaker dollar, I think that it's inevitable that through time the dollar must weaken.
How dramatically do you expect the US dollar to weaken?
Look, at
where are
some
we going?
point,
138, 139, 140, 160?
What we saw from the last round of weakening some time ago was that at some point people look at it and say, okay, there's value here. And that value could be 140 to 150. Obviously, as it gets there, people say 160, but at some point the market will think, okay, it's done enough. The fair value for the dollar in my head is around 120, 125. So it's not that far away or dramatically far away from fair value versus the euro. My sense is that it will continue to remain under pressure generally, because at the heart of it, the US is creating money. It's creating liquidity. They're not quite printing money. It's not physical stuff, but they are creating a lot of excess liquidity, and that in any other country, if this was happening, in South Africa, the currency would be collapsing. So it doesn't mean that it can't come under pressure in the US. It's just that the US is a special case in terms of the dollar. But the general bias would be, while the Fed is doing this, while they are creating this additional liquidity, the dollar, you would bet, over time will come under pressure. But there's clearly a point where at whatever the number is, I don't know, 140, 150, the market wakes up and says, okay, I'll buy the thing now. It seems a little bit more fair value now.
I put the question to Jacques earlier about Euro Rand at the 940 level and the fact that the Rand is weaker against the Euro compared to what we've seen of late. And then we had the data flow out of the Eurozone today. We've got a weaker manufacturing and services sector. We've got credit swaps widening in that territory. And surely things aren't that rosy in the Eurozone to justify a stronger euro either.
No, the dollar needs to weaken, the euro needs to weaken, the developed world needs to weaken. Unfortunately, none of the emerging market countries want their currency to strengthen. So there is a tussle going on, and you are correct. The Eurozone has problems. Euro-dollar is going to trade in a range. It's going to be volatile. It's going to be susceptible to headline risk. It's got the unique problem in the fact that the Eurozone can't devalue its currency as it currently stands. It's got a strong Germany, but yet offsetting that, it's got weaker neighbors or people who are part of the union. So I think the euro is going to not necessarily be extremely volatile, but it's going to trade in a broad range, and it's going to be held ransom to headline risk.
It would be very nice if the euro area was particularly strong, right? If it was a convincing set of countries that had emerged as a cohesive group and that their economies were all similar, then you would find that people under current circumstances would start to hold the euro as a core currency or as a reserve currency, and the euro could strengthen, but it's not. So that's why I say the dollar weakens to a point, and then you look at it and you say, okay, relative to the realities of what Europe is and US is doing, I'll buy back into the dollar. So I'm not convinced that while I say the dollar will weaken, that it's a perpetual weakening. It'll find that level, and then the market, and then I think people will buy back in.
Garth, this information around currencies is bamboozling. As you say, you've got the developed world currencies and the emerging world currencies. There's a tussle going on. Emerging markets don't want a stronger currency. Developed world trying to stem the weakness in their currency. Well, it's to their benefit in some situations in the current economic turmoil. But if you were to put your money somewhere in a currency with all that data on the table, what would it be? Are you going to head for the Swiss franc, like a number of people are?
I think you have to put a time frame on it. I think 5 years is a very long time to look forward, and I think it's very difficult to make a call based on where the world's going to be in 5 years. But if you had to ask in the next year where I'd put my money, I would continue to put them in emerging markets. I think they're going to be beneficiaries of global capital, and their currencies are going to perform well.
And you, sir, where would you be putting?
Well,
where are you putting your money?
The Swiss franc. But the problem with the Swiss franc is that it has reflected just that thought. In other words, it's priced in. And the Swiss authorities themselves are not particularly happy where the Swiss franc is. So it's a thought that has come about some time where you say, look, I'm not buying the euro, I'm not buying the dollar, they both got problems. Where do I go into a tradable, liquid currency that is stable, etc.? And the only one is the Swiss franc. And so that trade's happened. I'm not convinced that you would put more money in from these levels. So you end up being a little bit at odds as to a compelling case. To me, if you're going to hold a portfolio, you're a South African, you're holding a portfolio offshore, you've really just got to try and hold a basket of currencies and not take a particular bet on one currency. I think that's where your risk lies. So if you're going offshore and you're saying, I want offshore exposure, what you're really saying is, I want to be diversified away from the rand. Then just hold a basket.
What about including in that basket gold as a currency?
I think gold has done well. I think a lot of the risk premium or the risks are priced into gold. I think it continues to do well because it's breached some technical levels. At these elevated levels, I wouldn't put my money for a sustainable period into gold myself.
If you had your money in gold, would you hold it or would you bail?
No, I don't think there's any technical or fundamental reason at this stage to suggest that gold's going to collapse. I just don't think it's the kicker. I don't think you're going to get a 10% appreciation in gold.
Copper, very close to that $8,000 a ton level. And the last time copper hit these levels, I think we retraced all the way back down to $3,000 a ton. Are we looking at a bubble in the copper price, or are we just seeing incremental gains that are sustainable from a fundamental perspective?
I think they are sustainable. I think you have to take a long-term view on these commodities. I think the emerging world is emerging, and it's emerging at a pace that is fast enough to justify being long these commodity currencies that have commercial use. I think copper is one of them, and I think that copper will just generally go up and continue to go up. But you are right, it's a big technical and psychological level.
Thoughts on copper? You must have been looking at it as it advances on $8,000 a ton.
Look, I think in the shorter term, maybe a bit stretched, but if you want to take a longer term view, which is a little bit beyond, say, 3 years, then the argument is very compelling because say in emerging markets will dominate, and I buy that view. And actually you could argue that about most commodities, that as you look forward, you're going to find generally there are supply constraints, and generally that the demand for commodities rise, and it's a good bet. It's just that under current circumstances, you can see what happened today on the market is typical, where you just having the rand where the rand is, just that whole concern about the global recovery is just weighing on those commodity shares. So at some point this trade's going to be fantastic, right? Where we're going to move into into resources, the rand's going to be under a little bit of pressure, and it's going to be a convincing case because emerging markets as countries are doing well. It's getting that timing kind of close, which would be quite cool. The timing's not right now.
Platinum, just your thoughts, Garth, before we close out on commodities, your thoughts on platinum. And my argument at the moment is that we've got an aggressive supply side constraint, even from a sentiment perspective. Northam's not one of the majors, but it certainly is impacting sentiment around supply, and that could be underpinning the platinum price, although obviously it's also benefiting from the general rally we're seeing in precious metals.
Long term, I would far rather hold platinum than gold. I think
Here we go, you see.
What can I say?
Now
Did you coach him before he came into the studio?
Remember Walter on the other day? I forget Walter's surname, but he said,
Walter
I was asking him to answer that exact same question. On a longer term, sorry I interrupted Garth, but gold versus platinum, why platinum?
And do you want to take us through that rationale, just elaborate, because the smile here is broad on Kevin Lings' face.
I think it's a simple argument. I think that it has commercial use, it has industrial use, it has use for jewelry, it has natural demand throughout a broad spectrum of users. And there's not a lot of physical supply. It's not on the ground in vaults, it's got to be taken out, and it has need, commercial need. I think it only keeps going one way.